Bring in fast money friend, Loup Ventures founder Gene Munster. Gene, great to have you with us. What's your number one headline here?
Well, you need to take the quarter into context. Tesla reports its quarter as all automakers do with two releases. One is the delivery number, and second, the earnings that we got tonight. The earnings tonight were essentially in line. We saw a bounce back with the important auto gross margins, but for the most part, as expected. Which brings me back to, I think, what the real takeaway here is what happened a few weeks ago around the delivery numbers. Those were up 109% year over year. It was up 66% in December, 44% in September. This is accelerating delivery growth off of higher numbers, which by definition is a growth story. These are very rare that they happen, and therefore we have what Karen is talking about, which is high valuation. But I just want to anchor the view of this quarter in context of those delivery numbers, because if it is true that the EVs are the future and they're 3% today, and Tesla has what I believe is the most compelling value proposition, if all of that's true, I have a feeling we're going to be having deja vu this year around quarters where the stock, the delivery numbers continue to be impressive. And I think that eventually the company will more than, I think, exceed that 50% target for 2020 deliveries.
Do you think that tonight management comes out and says that they're going to exceed that 50% number, only because it looks like consensus is looking for a lot more than that at this point? So even if they say 50, that may not be good enough.
They'll likely say 50. That's kind of, they didn't say anything last quarter. The quarter before they did, so sometimes they do, sometimes they don't say anything. But assuming they did, and they reiterate that 50%, to your point, Melissa, is that I don't think that would be viewed as a necessarily negative. I don't think that they would inch up the bar. I think Elon is slowly learning the virtues of being a public CEO, of keeping expectations low and trying to beat them. It's not in everything that he says. But to answer your question, I don't expect them to inch higher than 50. But the street now for the June quarter is looking for deliveries up 70%. And of course, we have this pretty easy comp coming in the June quarter. And so putting it all together, I think that despite any sort of commentary from the company, I think investors are going to leave the call optimistic that we're still early in this transformation.
Gene, how important is China in this equation? Karen mentioned the ASPs in China being somewhat little soft. I don't think that's big a deal. But can the Chinese effectively pick a winner and loser in this space if they, let's just say, start to favor a NIO, for example? I mean, is that something to be concerned about?
I think long term we should just assume that China is going to be led by Chinese makers. And to answer your question is, how important is China? China is important. It's really important for the story over the next few years. It's less important over the 5-year if you have the advantage of owning something for the next 5 years. Just a quick recap of why it's important over the next few years. It's about 35% of total global EVs are sold in China, and so it's a big opportunity. Eventually, it just is going to get difficult. All my years of covering U.S. companies who are trying to do business in China, eventually it gets difficult. And so I would just look at this as kind of a few-year tailwind to ultimately a global opportunity for Tesla.
Shepard Smith here. Thanks for watching CNBC on YouTube.